Good morning, everyone, and welcome to the latest Family Business United insight into family business matters. I'm delighted this morning to be joined by a panel of three great experts in their own fields. John Hart from Australia in terms of governance, Edouard Thijssen from London from Trusted Family, and Jason Oakley from Recognised Bank. So before we start, Family Business United is here really to serve the needs of the UK family business community and is now going global with our audience and our reach, which is fantastic to see. And the last year has been particularly challenging, I know, for many of you. The discussion today will focus on some of the things that family businesses can do to enable long-term sustainability and success, and learn from the experts that we've got in the room who are going to share their insights with us. Please use the chat function if you'd like to ask any questions. I will try and cover as many of those off as we can. But in the meantime, you're not here to listen to me. Let me introduce you to our panelists, and we'll start with John, if you'd like to introduce yourself.
Hello and good morning. My name is John Hart. Grew up in a family business and for the last 18 years been working dealing with governance matters, nothing except governance matters for boards, owners and businesses that are dealing with boards and governance. I work between Melbourne and London and around the world.
It's a long-term commute for many people, I think, John, so good for you, but I'm guessing you're being stuck at the moment in Australia. Edouard.
Yeah, well, hello everyone, and hello Paul, thank you for having me. So yeah, quick intro, I kind of have two hats. So I'm a next generation member of a Belgian family that's active in building materials. We are active in plastic piping for transport of water and gas and sanitary systems with all over the world. And so I'm involved there in the venture arm of the family business, where we're involved in sort of identifying new interesting investment opportunities where there are sort of synergies with the main corporate business. And then on a day-to-day basis, I'm co-founder and CEO of a company called Trusted Family. Trusted Family is sort of the leading online governance, board and shareholder management system for family companies. So it's a tool that was initially developed for my own family over 10 years ago. And now, you know, we have over 10,000 users, over sort of 150 leading family enterprises all over the world, and a team of 27 people. So it's been very exciting. And obviously the last year was very busy because a lot of family businesses sort of had to accelerate their digital transformation. And so, yeah, it's been a really interesting year for us.
That's brilliant, Edouard, and we'll come on to some of that later. And it's great to see a family business inventing something for themselves and being prepared to open it up and share it to others, which is fantastic. So good for you. And Jason, just a brief intro.
Yes, morning everyone. So I'm a career banker. I've been in the banking industry for 35 years. Just very briefly, I looked after the RBS and NatWest franchises across the UK. Then I had the great honour of building the Metro Bank business before it floated. But we still felt that there was something broken in the banking industry, particularly around relationship and continuity. So I founded and have built a new bank called Recognised that got licensed just before Christmas. And is dedicated only to the SME and family business market.
Fantastic, and we'll come on to that again shortly. John, if we can start with you, governance is one of those challenges that family firms sometimes struggle with and sometimes don't really know quite how to do what they think they need to do, and obviously seek advice around the world. I think governance, like succession, is one of those perennial conversations that keeps cropping up and isn't always addressed. Can we start with you in terms of what makes good governance for family businesses?
Thanks, Paul. And I think if we start with good governance for family businesses, the first thing I'd like everyone to really think about is that quite often we talk about governance as a panacea, and it feels like something that's imposed on us. And what I'd suggest is we always think about governance and boards through the lens of, is our governance adding value? And that's got to be the starting point. How do we help? How does the governance actually help the family business? How does it actually add value? And how does it help the family to create value in the businesses that they own and run? And when we look at moving to a potential board of directors, I always suggest that we think about 5 really clear drivers of board effectiveness and the effectiveness of governance. And the first one, deliberately in red, is role clarity. And in family businesses, it's more complex. No two ways about it. We have the overlay of relationships, family, all of those issues above and beyond the basic business. So role clarity is really important. What is the role of the board? What is the role of governance? And my suggestion always with family businesses is that we always start, first of all, with clarity, with the family actually spending time focusing on what is the role of the business. Is the role of the business to generate as much income as is legally possible? That might be one role. Is it to make a difference to the communities and the geographies and our markets and our areas that we live and serve in? Or, as some of us will have seen in family businesses, is it just simply a way of creating employment for family members? We really need to be clear, what's the role of the business? If there's a lack of role clarity, it actually makes the governance much, much more difficult. So my work over the last 20 odd years with family boards and family businesses, first thing we talk about is actually, what is the role of the business? What's the role of the business compared with the family? And that's very, very different to if we're working in a publicly listed or governance space, where we might talk initially about role clarity, about ownership versus directorship versus management, which is really important for family businesses. But unless we're actually clear about the purpose of the business, it will cause difficulty. First element of role clarity is the purpose of the business, being really clear about that for the family. And that's a very personal and very family orientated discussion to have. There's no two ways about that. Second aspect of role clarity is the role of the governance. How does that deal with issues of ownership versus management? And we go back to governance. The origin of the word governance is that wonderful Latin word, the gubernaculum, which most people say, what does that mean? The gubernaculum's the rudder. The role of governance is very much about steering the organization. Very different to management's role, which is rowing. And one of the biggest challenges we see, not only in family businesses, but in many other businesses, is when the board actually doesn't understand its role. It's trying to act as management rather than the board. So real question for the board is, are you steering or are you rowing? And that can be a real challenge, because quite often in family businesses, there's an expectation that people will work as managers, as well as directors, as well as owners, with the extra hat of being family members. So without that role clarity, or actually saying, no, we're dealing now with management matters in management, we're dealing with governance matters in the board, we're dealing with ownership matters as shareholders, and we're dealing with family matters outside of all of that, it can cause chaos. The other key elements of role clarity, basic stuff, are we clear about the different roles around the boardroom? What's the role of the chair or the chairman? How's that different to other family members? How is that different to the leader of the management team? Being really clear about that. If we're going to use committees, and I'd argue use committees when they're going to add value. If not, don't. You don't have to follow the textbook. Work with what's going to add value to your family and your business. Are we clear about the committee's role? What's it supposed to do? How is it helping the governance? How is it helping the board? And really, really good boards answer what I call the £1 billion question, which is, how is our governance going to add value? Moving to a mindset that our governance is about creating, stewarding, and enabling value creation, rather than being all about the board and tenure. So deliberately put it in red here, but role clarity is absolutely critical. And good family business governance separates the family matters from the ownership matters, from the board matters, and the management matters. And I know I grew up in a family business. We're in dairy and foods, all of the complications, challenges, but also benefits of that. And when we separated those four areas, we did well. When we didn't, we stumbled. So really thinking about that role clarity as a foundation. Second part of really thinking about the role of the board is just thinking about, what is the work of the board? Now, if we're going to have governance, what's it here to do? And I'd say there's 4 lines of sight we need to think about if we're going to have governance. First of all is what everyone says, it's about oversight. And that's pretty simple. Have we got really good processes in place to ensure effective oversight and accountability? The second one, which takes a lot more time, there's a lot more involved, and we sometimes forget, particularly with the fly-in, fly-out board members, we actually need to have insight, actually understanding the business, the drivers of the business, the cash flow of the business, the way things work in the business. Looking forward, good boards, good governance needs to be able to show foresight, anticipating what's around the corner. And our COVID world that we now live in has really challenged many of us in terms of our assumptions around foresight and what might happen versus what's actually happened. Great opportunities. When we're working with our clients, we talk about the winners, the losers, and the dodos in COVID. Those businesses that are going to do really well, those are going to be challenged, and those that are basically stuffed and their business is not going to continue to operate in a COVID world. And then finally, one of the things we often forget, and where family businesses have a competitive advantage compared with some of the more transactional businesses, last role of the board's really around hindsight, that corporate knowledge of having been here before, having the ability to say, well, this is what we've seen before, this is how we dealt with it, or this is what we've learned from it. So being clear that the way we put our board together, we're well equipped on those 4 lines of sight. The next driver is composition. And in family boards, a big thing to think about in terms of composition, big question I'd ask any family board is, how does your composition add value to the family business? The easy trap to fall into is we have a board made up of family members. The next trap to fall into is we've got a board made up of people like us that we know and trust. So we're not necessarily going to get the challenge and the constructive challenge or the ability to challenge in the way we might like. The really effective boards have a good composition, bringing in independent people who aren't family members, who bring skills, demography, knowledge, thinking styles, or circles of influence that the family simply can't bring to the table. Thinking about those, we call them the 5 drivers of diversity, but really bringing those extra elements that add value to the board. And when you look at a good board, you really want to make sure that board represents the past, the present, and the future. If you look at your family board and it looks like Jurassic Park, it's full of dinosaurs, something is wrong. So really think about the future. And one thing I'll draw out in composition to focus on very, very clearly, particularly for family businesses, is the role of the leader of the board. The chair or the chairman or the president, depending on the nomenclature, she or he has an absolutely critical impact on the way the board works, its effectiveness, and the governance. And when we look at effective chairs or chairman, couple of really key things that come through in terms of family businesses is we'll always talk about, for chairs of the board, the most critical relationship being between the leader of the board and the chief executive officer, the leader of the management team. I would argue in family businesses, the chair of the board's got an absolutely pivotal relationship with the family and the family owners of the business. If that relationship's not working, different to other organizations, different to private businesses that are not family or public businesses, the chair's role is in real trouble. So really critical. When we look at our board processes, moving relatively quickly, good family boards have good processes. So information, decision-making, reporting, good processes, papers, meetings, agendas, all of that. The assurance processes, sometimes we're not so good at that, but actually getting in third-party auditors or consultants to actually say, this is actually what's going on. Management's saying this and we're validating it. The disclosure processes. We often talk about them in a publicly listed space, but actually when we're dealing with banks, when we're dealing with owners, when we're dealing with family members, some of whom may be in-laws, some of whom are outlaws, making sure we've got good disclosure about what's happening. Other really key processes, more critical for family board governance and family business governance than elsewhere, that whole engagement with the different key stakeholders. So otherwise we'll have customers, management, all of those suppliers, all of those things. But in a family business, actually engaging with the family members who are relevant becomes really, really important. Few other really big processes for family businesses to think about in terms of governance. What are our processes around risk? So if COVID's taught us one thing, is that the classic list of risks, the risk matrix, is not particularly useful. COVID's really taught us that system risk, where a shortage of drivers causes a problem with containers, causes a problem with shipping, causes a problem with microchips, causes a problem with car production. That's the sort of thing where single issue risks set out in a menu really don't add a lot of value. Really thinking about system risks. So what are our board's processes around risks? What are our board's processes around strategy? How much time are we spending in our governance looking forward rather than looking back? Thinking about what could be rather than what has been. And so many boards fall in the trap of being focused on the past and present because the future is an uncertain place. And availability of current data makes us focus on the past and present. Looking forward, which is where boards will really add value, is a much tougher task. And add to that, that many board members, particularly in family businesses, grew up in, and the safe space is in, looking at the past and present as managers, rather than the future as directors. And then two key things that we often think about but forget: what are our processes around our leader of our business, leader of our management team? Everything from specification, selection, appointment, induction, review, development, succession planning, and exit. What are those processes? Are they good? Or are we still working on a handshake? And finally, what are our board processes? How are we spending time looking at our board in terms of our composition, our gap analysis of from where we are now to where we need to be, our selection, appointment, induction, review, succession planning, and exiting. And then finally, right-hand side of our slide, really drawing out the things that often don't get talked about in corporate governance. When corporate governance is driven by lawyers and rules, we often forget about the people. And thinking very, very much about our culture. What is the culture of our board? The board are very much custodians and shapers of the culture. And that often reflects very much the culture of the family. So making sure that our governance actually amplifies and supports our culture. Increasingly around the world, we're talking about board members, board directors being held accountable for culture. But in a more practical sense for us working in family businesses, we are very much dealing with the culture of the company, which often reflects the culture of our families. And how do we make sure the board actually enables that culture, reflects that culture, demonstrates that culture, aligns around that culture, but also assures itself that the culture is actually the right culture. And finally, the last key thing is our relationships. Really making sure that the relationships within the board, between the board and management, particularly between the board and the family, are working well. And those two most critical relationships in a family business governance relationship, between the leader of the board and the leader of the management team, and between the leader of the board and the family, making sure they're working effectively. And all of this looks really, really good on paper. I really want you to think about two critical currencies. If they're not present, your governance will be ineffective and will take away value rather than adding value. The first currency is trust. The second currency is respect. Thank you.
Thanks, John. There was a lot in there that I guess will resonate with the audience on lots of different levels, and I think the 4 sites, for example, to me will resonate quite closely, and we'll come back to explore some of those shortly. Edward, I'd like to come to you now. I mean, there was a lot in there that I know I've listened to you in the past and spoken to you in the past about family business on lots of different agendas, but you mentioned the digital engagement that's happened in the past year because of COVID. There's a lot in terms of the work that you do with families around relationships, which John's just alluded to. So let's start with what do you think drives long-term success for family firms? What do you see with your clients?
Yeah, so I think the first place to start is really to see how do family businesses evolve over time, right? Because in the end, it's kind of a numbers game, right? Like, you know, every business is founded by, you know, typically one or sometimes multiple individuals, right? And so that's then sort of a first generation business, right? And then, you know, progressively transitions to the second generation, which is going to be siblings. They were educated by the same parents. They know each other quite well, but, you know, they may have different interests, different backgrounds, etc., right? And then progressively you have the third generation that comes in, where you're talking about cousins that are educated by different parents. You know, often you start to have, you know, a lot more people involved. They spread out over different cities, sometimes countries. Some of them still work in the business, others don't, etc., right? And so I think the first thing is, like, whenever we talk to a family company, we try and understand in which stage they are, right? Because a first, second gen family business is actually quite different from a second, third gen family business, or from a third and fourth gen family business, right? Because in the end, it's all about people, and the people dynamics are going to be very different, right? So I think that's the first concept. And then the question becomes, well, how do you stay successful as a family in the long run, right? Because the moment you're sort of second generation, you know, we're really talking about shared ownership. And the moment there's shared ownership of something, you know, be it a business or even like a pool of investments or whatever, right? You know, there's going to be people that have more of an active role and people that don't have an active role, right? And, you know, the type of active role is going to be very different. And indeed, some families will have a board, some families won't have a board, you know, but it's just some people from, you know, whatever the number of owners will play a leading role, the others won't, right? And so I think the first thing that we think is super important is how do you manage the dynamics between people that are active and non-active, right? Because for the company to actually be successful in the long run, you actually need to make sure that there is trust built just on the ownership level, right? And so what builds trust, you know, between a group of 5, 10, 15, 20, sometimes 30, 50 sort of active and non-active owners, right? So it's really about building transparency in the system and building accountability, right? So transparency is very simple, but, you know, a lot of these family companies are private. And, you know, in typical times, they have maybe one family meeting once a year, or like a shareholder meeting. And, you know, that's sort of legally, that's sort of when you're sort of supposed to get information about the company, right? But as a family member that's non-active, getting information once a year about how the company's doing, you know, like that's probably not the best way you build trust in a system, right? And so I think our view, our trusted families, like, how can you build a communication and content strategy just to make sure that the people that are non-active are getting the information that's relevant and you know, and that makes sense from the active ones, right? And so a lot of our clients will share, you know, maybe like a bi-weekly or monthly update. It can be half a page, you know, it doesn't have to be long or complex. Just saying, hey, you know, like, this is what's happening, right? And, you know, like, certainly in COVID, people are like, well, you know, it's been very tough for the people that have an active role this year, just because of the amount of uncertainty, right? I mean, the world has changed so fast and so quickly that, you know, suddenly you have all these non-active owners who are more worried than usual and asking questions to the active ones, right? And so I think also, like, all the active ones were like, what do we actually communicate, right? And our view is like, it's actually better to communicate that you don't know something than to not communicate, right? So we worked very closely with a few clients to be like, when you can innovate the format, it can be sort of a, a bullet point list. Well, this is what's happening. This is what we know. This is what we don't know. And based on what we know today, these are some of the decisions we're taking, right? And just building that in a system, just suddenly it builds that sort of trust that's really critical, right? Because again, talking about COVID, the last 12 years, like 12 months, we've had a health crisis, we've had sort of, in certain countries, a political crisis, an economic crisis. You don't want to get a family crisis on top of it, right? Where the family starts fighting. And so building that trust and transparency and accountability is super important, right?
Edouard,
so coming back.
Sorry,
Yeah.
just do you find then a lot of that goes back to the relationships and the understanding of who's wearing what hat in the structure of the family and the family business? So there's different levels of communication for different levels of people. So that's a kind of another layer on top of what you're talking about in terms of the last year's exacerbated that, hasn't it?
Yeah, and so that comes back to the structure, right? Certain families were very well structured before, getting to the crisis. Others worked more informally, right? So I think that's what John was talking about. Obviously, like if you have a board, like if you have, just like if something's important, you need to have someone in charge for it, right? So just communicating to shareholders, like who's in charge for that, right? Is it the chairman? Some families have like a head of like shareholder relations or sort of a corporate secretary who handles that, right? But it needs to be clear whose job it is to actually make sure that everyone has access to the same information at sort of the same time, right?
Yeah.
And so just to come back to your initial question, which was really like, how do you sort of stay successful and build a family business in the long run? So I just talked about the first pillar, which is building the trust at the ownership level, right?
Yeah.
But then I think the next thing is, in the end, you need to make the right decisions, because, if you want your business to be successful, you have to make a bunch of decisions that follow each other and that have to make sense and lead to business and family success, right? And so I think the question becomes, if you're sort of a only founder at the first generation, you make most of the time all the decisions,
yeah,
and you're accountable for these decisions, right? And when you sort of pass on to the second or to the third generation, suddenly you have to deal with shared decision making. And it's really understanding how the shared decision making actually work, and building these governance systems and processes to actually get to like good shared decision making, and which decision is taken and at which level, or who are the best people to make what decisions, etc. Right? And I think again that's very unnatural, because like if I'm a G2 member and I've seen my mom or my dad take all the decisions by themselves, that sort of model I've seen is not going to work at my generation, because if all the G2 members operate in the same way, they won't be able to work together, right? So like G2, their first priority is to learn to work together and make the right decisions together and understand like who can bring what to the table, right? And same at the G3 level, because typically at the G2 level, it's like like if you're like 2 to 5 kids, it's still relatively easy to actually meet and like discuss certain elements, etc. right? But once you're G3, typically you're talking about 10, 15, 20 cousins, right? And there it becomes a lot more challenging to actually take decisions, right? And so there you're gonna evolve to sort of more like a representative governance, where like not everyone is actually in a meeting, and you get more and more these dynamics between active and non-active ones that that I was talking before, right? And so a trusted family, obviously like we think each family needs to design the governance structure that works for them, right? With boards, investment committees, family councils, and that's going to depend on the complexity and what they own and all that stuff, right? But I think a lot of the work we do is, because we're tech companies, also like how do you make sure the people have the right information to make the right decisions, right? And that's really, really critical, because everyone has their own perspectives, their own experience, etc. But in the end, to make the right decisions, you need to have access to the right information. And so, we try and do a lot of work to like design the information flows that people need to have access to before board meeting, before shareholder meeting, etc. Right? And then the last point is actually like, how do you make sure that decisions that are taken actually get implemented and followed up on? Because it's so easy to have a meeting and then to talk about a lot of things and then to say, we should do this, we should do that, this is where we're going. And then 6 months later, you sort of come back and you realize that, nothing much has changed, right? And so I think there, we're really thinking, how can we build technology to help, family businesses and family offices like really follow up on the decisions they're making, and also, build accountability in the system, right? So a lot of families, often their businesses run very well, but then when they meet, it's like no minutes of the meeting, and it's like stupid little things, but like that's some of the first things we really advise people to do is like make your communication and interactions together as a group a little bit more formal, right? Be it a board or family council, or even if you just get together to talk about certain things, if important information is being shared or important decisions are being made, they should actually be documented and written down, because just by writing them down, you get that sort of shared understanding of what the decision actually is. Because sometimes 6 months from now, when you have 5 siblings, 2 of them are gonna understand a decision very differently, if it's not been written down, right? So I think that's really sort of where we come in that ecosystem, is trying to use tech to enable sort of that board and shareholder governance and accountability and transparency.
And I guess what you're talking about is, over time, Edouard, is almost, it's the professionalization of the business, isn't it, in terms of the governance and the structures. And also, I think we hear it a lot, but actually documenting and writing things down in a shared place so everyone knows where they are and what they've agreed to, reduces the impact of disputes and disagreements later on, especially when, as you say, you've got different members of the same family in different countries that may interpret things in different ways. So documentation has to be a good thing, surely.
Yeah, I mean, we think it's critical, right? Because, like when things go well, no one complains, right? It's when things are difficult that people complain, right? And, it's very easy to complain if I'm a non-active member and I haven't received a lot of information or nothing's been written down. It's very easy for me to launch an attack on the active ones and to be like, oh, I never knew about this. I didn't have access to that information. Why was this decision being taken, etc. Right? And I think that's the issue often that leads to family disputes. Whereas if everything's centralized and documented, and technology enables you to have audit trails of like who's looked at what, when, etc. Suddenly, like, people can't really complain anymore if they were not checking the information or reacting to the information, etc. It's because they were not engaged and they were just, not being responsible back then, right? And so I think that really changes the dynamic actually in a family company.
Yeah, I'd agree with you totally. And I guess going back to what John was saying, John, and I think you probably agree with this, a lot depends on the hat you're wearing and defining and clarifying roles and responsibilities and who can do what, get involved at whichever stage. So I guess it ties in very close to what you were saying, John.
Absolutely. And also those 2 key currencies that Edouard's really highlighted. One is respect, but the most critical one also is trust.
Yeah, definitely. And we'll come back onto that in a moment. Jason, I'm mindful of the fact you've been sitting in the wings waiting to talk to us this morning.
It's actually been fascinating listening. I've been making a few notes, so there's some really good stuff in there.
It's good when a panelist is making notes. I like that even more. Jason, you've come from a banking background through and through, and you're a banker, and you have recently, as you explained earlier, set up Recognise as a bank to address the needs of the SME and family business sector. A lot of what you've just heard, I guess, goes back to the trusted advisor kind of piece and the relationship that you would have had in the past. So how does that resonate with you in terms of what you're doing and how you're working with family business clients?
Well, I think there's some really interesting. So just honing in a bit on what John said. So we're fortunate our parent is City of London Group, which is an AIM listed entity. So they've really been the parent that's helped us mobilise. It's taken us about 3 years to get our banking licence. But what's interesting within there is that we've got 3 large shareholders, which are basically family offices, or ultra high net worth families. So we've got the Bard family, who are very significant real estate investors, particularly in Shoreditch. We've got Ruth Parasol, RGA Advisors, who's a self-made billionairess, and then we've got DV4, which is a Delancey advised vehicle, the Ripback family. So I could really resonate when John was talking about getting the criticality of the relationship between the chairman and the family, or the families, because often these ownership structures can be multifaceted. So I certainly resonated today. In terms of the banking, I just thought I'd make that point, because I thought it really hit a chord with me about the criticality of investment, building trust, having respect. Those are so key. But it is very much about investment in the story, engagement, building those relationships, getting to the point where people do accept you're good custodians of their money and their investment, to move any business enterprise forward. I suppose in terms of family businesses more generally, they are one of the key, a key backbone of our economy, make no mistake. But a lot of family businesses are lifestyle businesses, or are, they do an incredibly important job, but they're not all in the kind of category we've focused on, which is the much more mature, super successful, significant, multi-generational families. Of course, there are some of those, but they tend to be the exception rather than the rule. Most family businesses are relatively more modest, but still critically important. So when we looked at the SME sector, including family businesses, we were concerned that things were dysfunctional. They were not working the way, certainly in my career lifetime, particularly the early part of my career, was just taken for granted. Simple things like having a relationship manager that knew your business, could be responsive, could be accessible, was creative and followed through in regional or local locations. Now, that SME family business sector makes up 52% of our gross domestic product. In fact, in every country, I know in Australia, we've got Jumo Bank that's making a really big stab in SMEs. There are disruptive new players coming to the market. And Edouard's point about technology, again, really resonates with me, because we've been looking, thinking, how do we get the essence of relationship? What have we seen with the big banks? We've seen them force migrate smaller lifestyle businesses into call centres, remove relationship managers. It really has been a denuded experience for them. And obviously through the pandemic, which has been incredibly disruptive, that trusted advisor, this point back about trust and something you can go to as a sounding board, a lot of that has disappeared from the financial crisis and now exacerbated by the pandemic. So we really kind of tried to think through, how do we provide a service? And bear in mind, the research that we did in the UK with SMEs was 72% of SMEs and family businesses wanted access to face-to-face contact when it was important. Not always, but there are cycles in every business, as we know. There's good times and there's bad times, and every business has challenges. Every business has periods of spurts of growth and great opportunity. So having access to someone that they know, that knows them, that knows their business, and that can be responsive and creative was really important. But the traditional ways of distributing that do not make economic sense. That's why the big banks have forced a lot of these businesses into call centres, because they can't make money at a portfolio level. So taking the principles that Edouard mentioned, we've really come up with a different way of servicing the segment, which is what we call digitally enabled relationship banking. It's taking technology, it's taking the best. So we've now built, with our partners, we've built, I think without overclaiming, the most advanced SME banking platform in the UK. But technology for me is about enablement. It's about enabling us to spend more time with our clients. And it's also about enabling our clients to use the technology for convenience and fulfillment when it suits them, but always having this access to somebody that knows them, knows their business, that can have real value. So that synthesis is the key. And so, we're firmly wedded, Paul, to serve clients, to get to know our clients, to add value, and to also give them an omni-channel experience that suits them. When they need it, use the technology. When they need a face-to-face interaction, you use that. So hopefully that kind of addresses some of the points that John and Edouard make. So I was just trying to create the links from some of the points that they raised.
Yeah, and I think what's really interesting to listen to you in terms of the banking scenario, it's not dissimilar really to the Edouard scenario with Trusted Family in terms of digitally enabling people to get resources and information when they need, at a time they want, wherever they're in the world, to be informed to make the right decisions, which links back into John and the platform to make the right decisions and trusting the information you've got on the people that are there. Really interesting analogy to bring it all together. John, I want to come back to you just briefly, because you were talking about culture and purpose, and how governance of any business goes right back to the heart of what you're in business for. What tools would you use in terms of talking to families, in terms of trying to get them to understand? Because a lot of families won't even understand they have their own culture and their own value set. So how do you drive that so it becomes an aligned platform to build on and make governance work?
Yeah, I think, Paul, I'd tackle that on several levels. I think one of the issues around culture is people often say, well, that's a big business issue. It's not relevant to our business. But actually, first thing is actually helping the family and the owners understand what is the culture. And if we just put culture in the most simple terms, it's the things we walk past. It's the way things work around here. It's what we do when no one's looking. And helping family members, family board, governance structures actually understand what are the good things in the culture, the really strong assets. And often family businesses, we've talked about them as being major enablers of economic growth. The good aspects of culture can be really, really powerful, much better than being in a faceless business where there aren't people. The family can bring so much to the culture. I was lucky enough to work for almost a decade for the Mars family in their business, and what that family brought to the culture of the business in terms of ways of working was so powerful. So recognizing the assets in the culture, but also recognizing where the culture might need to be shaped, where the ways of doing things aren't necessarily either appropriate now or enabling us to be fit for the future, and being aware of that and having a very clear view of where we want to lead the culture to. And I'd suggest quite often people forget about culture. They think about it as it is, but actually culture is a journey. And as organizations go first generation, second generation, third generation, good times, less good times, culture does change. So recognizing it is a journey and bring it right to the pointy end for a board of directors. I'd say there's 6 really key things they need to do above and beyond the philosophy of culture. 1 is to actually inspire the culture. 2 is to make sure that the rewards and the consequences align with the desired culture. 3, which is a really tough one, board actually need to reflect and demonstrate the culture. So don't talk about being innovative, but then crucify someone who comes to your board with an innovative idea. It's actually that authenticity, really important. 4th one, coming through really strongly, is actually assuring around the culture. And then the 5th is around inspiring, and the 6th is guiding. So moving culture from being a theoretical concept to actually something that family and family board members can really actually engage in. I hope that helps.
No, that sums up really succinctly for me. Edouard, do you have any? You want to add something?
Yeah, it's actually interesting because, like, obviously, we think a lot about how culture transfers online. I mean, I'm going to give you one example, right? Like, let's say you have a shareholder meeting where like 20 people show up. You know, you always have a few that actually are engaged and speak in front of a group, right? And then you have others that, you know, just don't say much, right? And so we've been doing a lot of thinking, well, how do people actually interact with each other in a digital environment, right? And certainly now it's been a huge topic, right? Like, how do conversations, discussions happen? Do the same culture principles apply there? Or can actually technology break things down? I mean, just like on a Zoom call, you know, if you have a board meeting, like certain people are sort of more imposing sometimes in a physical meeting, whereas on Zoom, everyone's behind a little box and just, you know, like the dynamics are very different, right? And so I think it's something we see where sometimes people are not comfortable, you know, speaking in public in person, but, you know, asking a question digitally or sort of sharing their opinion there, you know, it's like, there are ways to do things differently. And so, yeah, just wanted to comment on that as a lot of interactions move online, the question also becomes, well, what's culture online, right? And also I think something that we've noticed, I mean, just in my own business is, you know, like when you spend a lot of time in person, you have a lot of time to actually have these informal chit chats, right? I think people on Zoom, you know, it's like, hey, you have a mini icebreaker and then it's like straight to business kind of, right? And so like things that we've tried to implement is just, so we have like every week, everyone in the company gets matched with someone else in the company for virtual coffee, basically. And so everyone has a 15 to 30-minute virtual coffee that's sort of automatically scheduled with someone random, just so that they get to know each other, so that, you know, you build a relationship, and it works great. And there's actually a rule, we're not supposed to talk about work in these little coffee meetings. It's just about getting to know each other as individuals. So I just wanted to share that as a few elements of like, hey, with everything happening now and us being remote, like how does culture actually like evolves in this time, you know?
Yeah. I love the idea of a virtual coffee. The downside is you still have to make your own, which isn't quite as, it's not quite as appealing, Edouard, to be fair, but I do understand it. In the world we're in now, we have to try and maintain those social interactions that are away from work to actually understand who you work with, your colleagues, and make the right decisions.
I have a coffee shop across the street. I don't go, I just go out, take my coffee and then take it in front of Zoom. So you don't really have to make it yourself.
It's a 1.5 mile walk to my coffee shop. You do have to make your own, but still. Yeah. Jason, it must be interesting for you as well, because I know you talk about the culture and trying to do things digitally, and almost being forced in the past year to start up making relationships work through electronic platforms that most of us didn't even know about a year ago. So things have moved on quite quickly. The other thing I think is really important for us all to understand in terms of advice is the narrative and the story, because as Edouard goes, when you go through from first to second to third, there's a lot of stuff that's gone on, there's a lot of history that needs to be documented, but that narrative is what makes family businesses really special, isn't it?
Yeah, for sure. And to be honest, one of the most fascinating and enjoyable parts of my job, genuinely, is understanding the story, you know, and the number of times I've met, you know, take for example Edouard and the forced migration of Asian people into the UK, and some of those first generation came with like £10 in a suitcase, and then they've built through the second and third generations very significant businesses. So listening to their story is important, and also how you treat people. You know, you treat people the way you want to be treated. So at the very core of culture for me as well is about respect, and it's about nurturing, whether it's your client relationship, whether it's your colleague relationship, you're looking for those relationships to nurture and grow and be as successful as they can be. The one thing I was just going to comment, which is a slight tangent, but the question is asking John, one of the reasons I like family businesses as a cohort at a kind of macro level is, one, because of their sense of obligation, because they're custodians and they're handing wealth from generation to generation. So their thinking is different. It's not short-term thinking, it's longer-term thinking. Their decision making therefore tends to reflect longer-term wealth creation or value creation, rather than short-term hits, which can either be reputationally harmful or have some dysfunction attached to them. So because I'm a strong advocate, I'm more traditionalist, I'm a strong advocate of a long-term relationship banking, I naturally gravitate towards the principles running these family businesses, because that's their mantra too, you know, that we kind of want the same thing, which is long-term, rich, good flows of communication. And just on Edouard's point about the pandemic, it's incredibly difficult to connect and motivate staff. And particularly, I've got a younger cohort, all businesses do, but I've got a younger cohort, and we've had a year of pandemic where some of my younger cohort, particularly my London-based people, because we've got offices in Manchester and Birmingham and London, but my London-based people typically live in one room in a HMO. You know, the postgrads, they've not got a huge amount of money, so they have literally a room, and that's their existence. So I love your idea, Edouard. We've done yoga sessions, we've done dietary advice, you name it. We've come up with all sorts of ways to try to stimulate. And it's that mentality, whether it's internal or external. How do you keep these relationships fresh and add value, and constantly thinking how you can do something to exceed expectation, whether it's your colleagues or your customers? And I think if that's at the root, if that customer centricity is at the root of your culture, that's hugely powerful as well.
I couldn't agree more, Jason. I'm now going back to the appreciation, Edouard. I like the coffee more than I do the yoga opportunities. So definitely coffee's back on the agenda. We talk a lot about generations, and you're talking about a younger cohort, Jason, and John, back to you really. So we've talked about the evolution of a business from first to second and how it grows with more people, different hats, more responsibilities. But when you've got a founding generation that have made all those decisions and have had very little structure and governance in place, how do you take that business on a journey from being a very regulated, unprofessionalized governance framework into a conversation about putting in place structures that will help the business sustain in the longer term? How does that start for you?
Yeah, a great question, Paul, because governance we often talk about, but the reality is that organization rather than leading it. And I think we've got to be realistic that quite often the governance is going to follow rather than lead, and probably that's a good thing in terms of, otherwise we will be overgoverned. And actually having the conversation, which really means about making the case that governance really does help the legacy to come to life, really does enable the custodians to deliver what they want to achieve, really protects the group from the individual, and also the individual from the group. And particularly as we move to second and third generation, where we will have, as every family business does, what I call the in-laws, but also the outlaws. Some will be active participants, some will be active disruptors, and trying to make sure that the governance actually enables things to come to life and helps the business rather than being an imposition and an overhead which doesn't add value. And that's why I go right back to what we said at the very start of the conversation. Our governance has to add value. If we're following a textbook governance because someone's told us that we should, institute directors or whatever the group happens to be, well, keep questioning, how is the governance adding value? How is it relevant to our family, our business, and the legacy we want to bring to life? And it actually, just building on Edouard and Jason's point, now in the virtual world, I'm seeing so many boards that are missing out on what I call the coffee, cab, and corridor conversations. That sense making that we do as human beings when we're in the same place, the virtual world deprives us of. And it really draws out the importance, particularly for those working with family boards and family businesses, of really actively listening. If anything that's come through the whole COVID crisis for all of us is actually, we've got to pay much more attention to listening and having the emotional intelligence, humility to say, okay, so how is our governance here, our way of doing things, really going to enable the legacy, the vision to come to life?
It's a good point, John, and actually Jodie from Matthew Woods has just posted a comment on the board saying that your point about listening is really, really important, and that advisors in general, the advisory community really needs to listen, and are privileged enough to be supporting and advising family firms about their future, but also helping them shape their legacy. So listening is a really important skill for us all to take on board. So Jodie, thank you for that. Edouard, in terms of the conversations that you have with your multi-generational families that you work with, how do you talk to them about professionalizing that governance for the business going forward?
I think what we say is really like, if something's important, I put someone in charge and assign a budget to it. And I think, the big debate, I think, is how do family businesses themselves evaluate the importance of governance, right? So I often give the example, if you look at a listed company, the money they spend on regulation, governance, compliance, shareholder relations, roadshows, all that stuff, and you take a private family company of about the same size, the difference they're spending is huge, right? I think the second example I'm going to give is what's kind of the investment required to like keep a family business working together, right? Let's say you own a company as a family that's worth 100, right? If you sell this company and you have 10 shareholders, everyone's going to get 10 of that company, right? And what are they going to do? They're going to most likely work with a private bank that's going to, advise on a sort of investment portfolio, and the bank's going to charge 1% to manage that, those assets, right? So now, come back to the main business, and let's say, actually, how much should we spend? If you take 1% of 100, in most cases, that's a very significant amount, but most family companies are actually not spending that 1%, and even if you spend 0.1%, in most cases, this is still a pretty big amount, right? So what we tell people is like, just take 0.1% of your company value and invest that in governance, family, shareholder relations, education programs, governance processes, just to like manage the system, right? Because if you don't do it, likeliness is at one point the company is going to get sold, and then what's going to happen is, you will be charged these fees anyway, right? And so, that's just a metric that we've seen more and more families sort of apply to really say, actually, it does make sense to be a family company in the long run, right? And then, you need to invest in all the trackers, because like, if you assume by the third generation, people are selfish, right? Like, why do they still want to be part of the family, right? If I don't work in there, it's like illiquid, etc., right? There's really two reasons, right? There's a financial attachment and a non-financial attachment. Financial side is like, how do you make sure that the family business outperforms the stock market, right? Because otherwise you're better off selling the 100 and investing in the index tracker in a certain way, right? And so how do you build the governance processes to actually ask yourself these tough questions? Like, is a business, growing? Is there opportunity in the future? All that stuff, right? And then, there's also that non-financial value to be part of a family. Often these family companies like represent a brand, an identity in a certain community. They give you access to a lot of opportunities, and just that actually has value, for individual family members. Yeah, so that's just a few comments.
Again, that all makes sense. The other bit I just wanted to explore with you, when we've got the time, is we're talking about governance, and a lot of we're talking about is the relationship of the family with the business, but a lot of the governance things we talk about are all business related. What sort of structures do you see in place to help families in terms of manage the family governance and the family roles and relationships, which differentiate slightly from the more corporate scenarios, and how can they be married together? I don't know who wants to take that first.
I'm happy to kick off. I think what I've seen work well is where we have a forum, whether we call it a family council or a family group or a family forum, that deals with the family issues. And the family issues are often beyond just the business or the businesses and a legacy. They're often quite complex and often have a large burden of emotion, both good and sometimes less good. So I think the effective structures I've seen are where the family can separate family matters from ownership matters, from board governance matters and day-to-day management matters. And I just put that across as broad principles. And where I see it falling down often is where people just take a textbook approach rather than saying what's going to work for our family and what's going to work for our business, and making it relevant and meaningful and reflecting the personalities involved.
Yeah, there's nothing worse than a textbook scenario and somebody coming in with a one-size-fits-all methodology, because it does vary, doesn't it? Every family is different, every business is different, so you bring the two together, and the different aspects make it much more complex. Edouard, thoughts?
And yeah, I think what John says makes sense. I think it's just the key is to understand that as the family gets bigger, you need to have a shared understanding of what's the impact of the individual behavior of a family member on the rest of the family, right? And it's just having a forum where people can talk about it and develop policies and stuff, right? Like, if you have the same family name as the company, your individual actions, have a reputation impact on the rest of the family and on the company, right? And it's building a shared understanding of what's of what's encouraged and what's not encouraged in the family, right? So I think often it just, you don't want to have too many rules, but it's talking about the things before they happen, so that there's like a shared understanding, between the family, right?
Yeah, I agree with you, and especially in the world in which we live now, managing shareholder responsibility and individual responsibilities when social media is out there and everything potentially is on display. I think that's really, really important, just to manage the reputational risk of the family, but also the business which are entwined is a really important point. Jason?
Yeah, the only other, I'm no governance expert, so I defer to my esteemed colleagues, but what I've observed, and it's somewhat stereotypical, but I do think it's broadly true. The first generation have incredible challenges, make incredible sacrifices, create value from nothing, and it's an incredibly difficult, challenging journey. And their children experience that by default, because as youngsters, they experience the sacrifices and the challenges as that family-owned business becomes progressively more successful. So there is this really strong sense of purpose and obligation with the immediate next generation, the kids that have been party to that experience. What you then start to see, and actually it does go in different ways, but generally speaking, the second generation are obviously a lot more affluent, and therefore their kids get a better education experience, a much broader spectrum of expectations, contacts. And so you start to see that dilutive impact coming through in terms of the original cause, the level of commitment, and then you start to see that. So one of the challenges I've always observed with these businesses, occasionally you get somebody exceptional in that third generation that then re-energizes or moves it in a whole new direction. But generally you start to see a level of decline without that new injection of purpose and drive. So one of the questions I was going to ask Edouard is, does that resonate with you? Have you seen that? And in terms of how you support, particularly the third generation, how do you kind of how do you help these guys re-establish that strong trajectory? Because I tend to see it dip away by the third generation in the business.
Yeah, it's a great question. I don't think there's like a general rule book, but it comes back to education and how sort of the third generation grows up, kind of, right? And I think often family members sort of struggle to identify and to know, hey, will I join the family bit? Like, what's sort of my role that I want to play in the family business or not, versus, what can I do outside, right? And it's sort of this tension where it's also like, how does the previous generation make it clear what they expect from the next generation, right? And I think, some families, like, they don't manage that transition process very well, where like sometimes the third generation hopes for a long time that they will play a role, etc., but then it doesn't happen, and then there's a disappointment. Voilà. I think I can only speak to my own experience, kind of, right? It's just, I think freedom of choice and opportunity, I think that's what people should be encouraged to have. Like, yeah, the family business is obviously a blessing, but it can be also a platform for a lot of things, right? Like, if you think really long term, businesses come and go, right? The industries that were hot 50 years ago are not the industries that are hot today, right?
Yeah.
And what creates family businesses in the first place is entrepreneurship. So I think more and more families that we work with, they really think, how can we create this entrepreneurial culture and this entrepreneurial value and pass it on from one generation to another, right? Because if our next generation members want to be entrepreneurial and are entrepreneurial, it's going to recreate new opportunities, right? Be it in business or in other fields, right? It could be philanthropy, arts, whatever, right? Mm. And so I think a lot of clients are trying to like really focus on that, because the concept of entrepreneurship is very powerful. It's like, it gives a lot of like, freedom, but also like just, like a feeling of proudness sort of for the entrepreneurs. So more and more families are actually developing entrepreneurial education programs and support initiatives to encourage their family members to be entrepreneurial, right?
Edouard, I'd agree with that, Jason. I think it's about having conversations and making sure the generations come together, and that the governance framework of the family and the business really work together to identify the opportunities for the next gen coming through, create an opportunity to onboard if that's what they want to do. But also it goes back to what the business needs. And I think the business needs almost comes first in terms of making sure that you've got the right people in the right positions to lead that business going forward. A bit like the Jim Collins book, you should get the right people on the bus. It's not just about being on the bus, it's being in the right seat in the bus to make sure it's going to work going forward. So any framework that engages conversation and communication, I think earlier, gives that next generation a chance to find their own way and develop that passion and pride. But then it's about giving them the opportunity and then empowering them to have that opportunity. And the framework needs to be in place to let them develop and do it and make decisions and make mistakes and all that type of stuff. So it's a conversational piece for me, and it starts really early on. But I think you're right, there can be a waning of interest if the next gen aren't engaged and their passion and their dreams aren't there to be fulfilled in that organization. John, I know you were scribbling. Did you have anything to add?
No, nothing to add, no.
So just kind of coming to a close now in terms of the session, I'd like to ask you all really, if you had to give one solid piece of advice to a family that was kind of discussing governance in the board for the very first time in terms of how to engage their family, what would your advice be, and where would you ask them, where would you suggest they start? Edouard, let's come to you first.
I mean, I think governance never finishes, right? And so if you have nothing, I always say just come together in a structured way. Just having a meeting with an agenda and notes, that's the first step of governance, right? And then manage sort of this formality, but also bring the emotional in. So like, we know many families where they start the meetings with one question: how do you feel? And it's extremely powerful because people can really open up and share. Everything has stuff happening in their lives, right? But depending on what stuff you actually have, sharing that information can also help people understand how your current thinking works, right? Because sometimes feelings and emotions can influence your sort of thinking and decision making, right? So again, it's like nothing complex, nothing structured, just like come together, say, hey, we're gonna meet between that and that time. This is what we're gonna talk about. And we'll have written minutes, right? Like that's the easiest way to get started. And then over time, structure is going to come in and that's going to evolve, but just start somewhere.
Fantastic. Jason, let's come to you.
So I think for me, it's about galvanization. What is it that we all can galvanize around? I think, I know we're talking family business, but I think it transcends that. So I was thinking back to our journey at the start with Recognise, and it was trying to, what is our cause? What are we about? What binds us together and motivates us and creates energy and purpose and passion? And if we can hone in on that, because obviously, you know, families inherently, there's a myriad of other issues that can complicate business. But if you can have a sense of momentum and shared purpose, that's hugely, hugely powerful.
Yeah, totally. And John, finally?
Yeah, I'd build on Edouard and Jason's point. I think creating the conversation with the family about why do we exist? What are we here to do as a business? What's the purpose of our business is what consultants would call it, but actually the human conversation about why have we got this business? What's it here to do? And also really spending time on what I think are the human factors that have often got lost in the corporate governance conversation, which is what's important to us. What are the things that we think are valuable? And the business world has hijacked this and called it our values, but let's cut to the chase. What are the things for us as a family that are important to us in terms of that purpose? And I think actually having that conversation is really a starting point. Without that clarity of why are we here and what's important to us, it can become very, very challenging. I think the other thing I just draw to light, and Jason made this point and Edouard built on it, is that in family businesses, we actually have a significant asset. And that is that we don't have to go and report every quarter to a whole group of shareholders. We can take long-term decisions that the publicly listed markets could never do, because we've got a clear purpose and a clear strategy about how we're going to do that. And recognizing that gives us a freedom that other businesses don't have. And if we're clear about our purpose, we're clear about our roles and responsibilities and who does what and when, we're actually in a great position to continue to generate wealth.
Well, that's a fantastic way to end. I couldn't agree with you more. There's been lots covered this morning in terms of governance of both the family and the business. We've talked about trust and relationships, shared purpose, alignment of values, professionalising the board, the need for conversations, communication. Governance is a complex matter, and hence there are specialists around the world that help deal with governance and family firms in different ways. I'd like to thank personally Edouard, Jason and John for your time. John, I know it's late in Australia, for joining us this afternoon, or this morning even. So this morning in the UK anyway. I've got my dates in a mix here. It's been a really interesting conversation and one that I know will continue. There are lots of resources on the Family Business United website, and the three authors on the stage are the three contributors who authored articles for us. We will continue to share more and more on the topic and try and help family firms achieve their governance objectives. Thank you so much for a great session. It's been great to see you, and I look forward to catching up with you soon. But thank you so much for your time today. Have a lovely day.
Thanks, Paul. Take good care. Good to meet you all.
Very much.